So warm welcome everyone to this three-part series hosted by PCN in cooperation with Netcetera. In this series, we will be talking about risk and fraud prevention and how it can help create added value for everyone in the payment value chain, from issuers to banks to acquirers to merchants to consumers. And today on the show, we'll be talking to Katharina Luschnik and Tanya Steinhoff from Netcetera, joined by Jason Abbott and Lauren Baxter from Featurespace, with whom I will be discussing current payment trends and how specifically 3DS and risk monitoring can help to reduce fraud and improve the payment experience. Great to have you on the show, guys. And before we begin, let's do a quick round of introductions. Katharina, welcome. Would you mind maybe sharing with the viewers a short introduction?
Absolutely. Hi, Rogier. Happy to be here today. My name is Katharina. I'm working for Netcetera. I'm head of Western European sales in Netcetera and covering regions like the France, Benelux, UK, Ireland, and Nordic region, basically. And we are a payment security company very much focused on payment technology.
Great to have you. Lauren, welcome as well. Could you mind giving a short introduction?
Hi, so my name is Lauren. I am a product fraud channel specialist here at Featurespace. I have been at Featurespace for 4 years now, so born and bred Featurespace, and have been working on our new product solution of 3D Secure.
Great to have you. Tanya, also welcome to the show.
Yes, many thanks for having me. I'm a product manager for the Netcetera 3D Secure Issuer service and basically responsible for the design, implementation and rollout of the PSD2 functionality of the Netcetera's ACS. So I was responsible for the rollout of the MVCO 3DS 2.2 protocol. I'm currently already analyzing the next one. So that's my role and function.
Exciting. All right. Thank you very much. Jason, welcome to you.
Hi, nice to meet you all. My name's Jason Abbott. I'm a fraud SME here at Featurespace. I've been at Featurespace for just over 3 years now, but before joining, I've done many years working for some large banks here in the UK. And during that time, I've worked on various aspects of fraud, but one that I've spent a lot of time on and it's quite close to my heart is 3D Secure, and that's why we're here today.
Great. Well, it's exciting to see so much expertise around the table and looking forward to the discussion. Obviously, we have 2 people from Netcetera, 2 people from Featurespace. Katharina, would you mind giving a bit of an insight? What's the relationship between the both companies?
Yeah, absolutely. Yeah, I think the relationship is we share one passion, right? And that's payment security. So both of us, as we already introduced ourselves, are experts in securing payments, which is obviously more and more important for everybody's lives, daily lives. And we tackle that from a 3DS perspective, as Tanya already said. So an ACS supplier and Featurespace, of course, tackling that from a risk perspective. And that's perfectly matching together, and that's why both companies are currently today here as well to give a bit of insights. And of course, we are trying to shape the new state-of-the-art 3DS and risk solution together.
Great, very much complementary to each other by the sounds of it.
Exactly.
Nice. At the time of recording, we're now close to the end of 2021. We got Black Friday coming up. As well as the holiday season. So it's almost over 2021, but what would you guys, let's Katharina, maybe start with you. What would you consider kind of the most important payment trends of this year?
Yeah, that's interesting, right? So we saw, obviously, and we all know the reason why, a huge push towards e-commerce transactions. Everybody's sitting at home. And now seeing a bit of, again, having people out this year, we see a trend of this hybrid retail experience. So basically still shopping online, but picking up in the store, and as of course is reflected back in a very complex payment and buying experience. Yeah, so omnichannel is key. Mobile is more important than ever. And streamlining this payment experience from an online shopping towards a potential pickup in the store and maybe even shopping in the store in addition to what you shopped online, and bringing that together and handling that in a proper way. That is what we see as the most determining trends this year. And yeah, we will all see how Black Friday will develop, as mentioned by you, Rogier. But I think the main difference potentially to last year was that many people are shopping online and offline, face-to-face in the stores directly.
So that's certainly picked up, is what you're saying, yeah? So that omni-channel has become maybe even more relevant than it was last year because of that combination of buying online, maybe picking up offline, or having at least some sort of hybrid model.
Exactly.
Great. All right. Okay, Lauren, do you see the same type of trends?
Yeah, so there's three different sides to this, really. So we begin to looking at merchants, for example. So they're forced to sign up to PSD2, meaning that a larger proportion of the transactions are having to go through the 3DS protocols. Again, for issuers, they're also seeing the increased volume of 3D secure transactions. And again, for the consumer, they're actually seeing the 3DS journey come up a lot more, just due to the transactions, meaning that they have a lot more authentication. And this could actually also have an impact on the customer experience that they have. But one thing that we do need to remember is that, yes, the main aim of this is the customer experience from all different levels, but at the same time, we also need to be identifying the fraud as well. As Katharina was saying, during COVID, normal changed, and we really haven't actually gone back to normal. So where we've been pushed in the last year or two to really focus on those e-commerce transactions, consumers are creatures of habit. And I mean, I'm for one, am not looking forward to doing the Christmas shopping in store with the hustle and bustle of people. I would much rather stay at home and have it delivered to my doorstep. And therefore, I think we are always going to continue to see that high volume of the card not present transactions going forward. As always, with Black Friday and the Christmas period coming up, volumes are always going to go through the roof anyway. And this is where we also have a tendency to see issuers actually relaxing those rules just that little bit, just for the aim of creating a better customer experience. But obviously this is where fraudsters can obviously take that opportunity as well. And with the more merchants signed up, consumers are also obviously favouring those online transactions more than ever before, because they know that it's there and that they feel safe in transacting online.
Interesting. And there's that fine line between basically customer experience on the one hand and optimizing fraud prevention on the other, which we'll be discussing, I think, a bit more later on. So yeah, let's talk a bit more about how these payment trends then kind of increase risk and fraud behavior. I mean, what role does risk and payment security play in these new developments, Katharina?
Yeah, I think the most relevant word here is complexity, right? As Lauren described, and myself even before, the way we shop, the way we pay is getting more and more complex. So even if you think on your own daily life, you can easily simultaneously shop on two web pages, right? So common risk behavior before that, you might detect one IP address coming out of one shopping case and maybe reducing risk just out of the fact that it's not possible to shop on two web pages simultaneously. This has changed, and this is putting more and more complexity on risk and do a proper risk behavior scan, but of course also giving more complexity on securing the payments, and that's the main challenge. So we have this complexity of payment and buying experience, and this accompanied by the fact that PSD2 was introduced, right? So that there is a European engagement, that we have a stronger authentication check, that we have a proper way to protect payments, and this is a concept which is still quite coming out of a corner where this complexity is not given so much put into consideration as it would potentially have been if we would have started now. and kind of combining those two worlds. So this new complexity of buying behavior and payment, and this very strong regulatory aspect, bringing that together. That's the main challenge, I think, for both of us. So from the 3DS perspective, as well from the risk perspective, and we are all aiming for a smooth checkout experience. And as Lauren said, this is probably the main challenge we need to tackle somehow, especially this end of this and next year.
Yeah, exactly. As the complexity has increased because of the development of technology, people buy not only on their computers anymore, but also from their phones, from their iPads. Then there's regulation that comes into place. So it just makes it more and more complex.
Exactly.
Interesting. Jason, do you see the same kind of developments?
Yeah, so I'm going to answer the question in two parts. First of all, I'm going to talk about the what. So in terms of what role we play, I look at this from a few different angles. So if you look at the merchants, what are they going to be interested in? To enable merchants to deliver a risk-based approach, this enables them to avoid any unnecessary failure and abandonment, because this is obviously how merchants do their business. And the more failure, the more abandonment they see, sort of the less business they're able to let flow through. If you then look from an issuer perspective, we actually help enable them to meet their regulations. And we also enable them to use the richer data. And when we say to use, when I mean use this richer data, this is to use that data to prevent and detect fraud, whilst really heavily focusing on delivering the best possible customer experience. So you mentioned earlier about it's getting that balance, but to do that, you really need to look at the data and how you use it best. And then the final aspect of this, and it's been mentioned already, is the consumer impact. And for me, it's all about consistency with the experience, because today that could look very different depending on what card I pull out my wallet and where I am in the world. In terms of how we do this, and I'll talk a bit more about Featurespace in this sense, in that firstly, you need a platform to start with, and this platform needs to be able to enable the merchants and the issuers to fully optimize the usage of that rich data, a place where all that data can be pulled in and used to deliver the merchants or the issuers objectives. Now, the key aspect and the reason why Featurespace are excited about this opportunity is that we're known for delivering machine learning. Now, machine learning can be very, very beneficial when you combine it with 3D Secure for a number of reasons. The first one for me is the ability to know your customer, because when you can recognize normal behavior, it's much, much easier to sort of deliver like a low risk, frictionless journey, because we kind of know what normal looks like for an individual. We all know fraud changes, and we all know fraud changes very fast. As soon as you plug a gap in one space, they move and adapt. So being able to deliver machine learning that also adapts and can quickly identify changes in fraudsters' behaviors and kind of adapt and recognize new attempted fraud because of that instant adaptation is really beneficial. When you look at key events, we've already mentioned kind of the effects of COVID and Black Friday, and Lauren touched on it earlier that today a lot of issuers during these busy periods they are forced down a route where they need to relax their fraud strategy. However, if you've got a model that kind of doesn't just look at what fraud looks like, it looks at what individual behavior looks like, but also what behavior looks like across the board. If your model can identify that actually everyone's behavior is slightly different to it was before, and adapt and apply that to when you're making risk decisions, you almost can just carry on as normal. Your performance stays the same because you've got the technology that's recognizing the overarching change.
So what you're basically saying is that data is so relevant in order to build predictable models around or with, for example, machine learning like you guys are doing.
Correct. Yeah, and the more data that's there and the richer the data, and more importantly, the consistency of the data. We know that the PSD2 piece of work has taken a lot longer than we originally expected. But the sooner that we've got kind of all that richer data available and being populated, the sooner that both the merchants and issuers and consumers can kind of gain from the benefits of having that.
And is the data becoming more and more relevant because of the increased complexity?
Yeah, I mean, it goes back to delivering that best possible customer experience. To do that, like I said earlier, you need to know your customer. You also need to meet them regulatory requirements. Obviously, pre-PSD2, an issuer could kind of apply their strategy the way that they see fit or within risk appetite. But suddenly we've got some regulations that we need to meet, and everyone needs to meet them. So having that extra data and that extra focus on this change will certainly help everyone get the best possible results.
Interesting. So we've mentioned, or you guys mentioned a few times now, 3DS. Let's maybe take a step back and look at the beginning of that. Tanya, can you maybe talk about how and why 3D Secure was introduced first?
Yeah, yes, for sure. But I'm fearing that I'm now a bit the boring one, from machine learning back to 2002. So let's be honest. Back in 2002, the question was not about risk or customer experience. It was about preventing fraud. And this is why the 3DS1 protocol was introduced by Visa as basic messaging protocol to prevent unauthorized card not present transactions and to protect merchant and the issuer from fraud. In preparation of this session, I checked online again when the first iPhone was introduced, because that's for me like a milestone when we started to also do app transactions. And you mentioned earlier, we are now shopping via iPhone, iPad. It was introduced in 2007. So the 3DS1 protocol was introduced earlier than that. But still, it is still being used. And what I'd also like to clean up here a bit is some myths. So the 3DS protocol is not bad. It's still functioning, but only for browser-based e-commerce transactions. And it started very much static with password checks or OTPs. So one of you may remember that you then just needed to enter a password which you don't remember. And yeah, I must admit that user journey sucked, but it was helping preventing fraud nonetheless. Anyhow, still with the 3DS1 protocol, frictionless consumer authentication can work. For example, we process still 30% of our transactions via the 3DS1 protocol, and we can also do risk assessment there. And here comes into play what also Jason mentioned already. Then maybe the data is not as good as with the latest protocol versions. It enables consumers to identify themselves for the first time. So when someone back then entered your credit card details, it was the first measurement or the first milestone that this transaction could have been stopped and fraud being prevented before it actually happened. And I must also say, even 3DS1 is already compatible with regulations like PSD2. So also here, all requirements for dynamic linking, strong customer authentication, all what you may have heard can be fulfilled with the 3DS1 protocol. But I mentioned the iPhone, which was introduced. We are now also already talking of having, for example, a car as a payment device being used when charging it. New user or shopping journeys must be supported, and that's why the MVCO Association was founded, and with that the new 3DS2. I now call it 3DS2.x protocol versions, and that with that versions, all current occurring e-commerce transactions can be supported, and with that I can now also do the bridge back to risk-based assessment, where we are coming to there are much more data exchange possible possible in the new protocol messaging. And it simply reflects current and future market requirements. So I know that Envico plans to come out with a new protocol version every 2 years. This was now with COVID and PSD2 a bit delayed, but we will have the option in future to react faster to newest market trends. And in conclusion, I must say we have still on the market 3DS1 transactions and various protocol versions from Envico out there. So it's important also for when talking about RBA to have that in mind. So we are when talking about 3DS, we are not only talking about the latest version or now the upcoming Envico 2.3 version, but in regards to RBA, it's very important to keep in mind there are various protocol versions out there which have a mix of support in regards to exemption logic, regulations, etc. So I can just confirm what you mentioned earlier. It is a complex environment in which we are moving here.
It sounds like it. Luckily, 3D Secure has certainly evolved over the last 20 years with that. When it was 1.0, Lauren, how easy was it for fraudsters compared to now?
It was significantly easier. And if you kind of think back as to, again, why 3D Secure was brought in, it was that additional security layer. So, for example, credit cards were so easily compromised back in the day. And this is a massive problem that actually came around. And this is why a tool like 3D Secure was actually brought in. It was for that added security. And it was also to give the customer that added confidence to actually transact online. Again, if you think about it, another great example of this, as Tanya said, was like you had a physical point of sale transaction. You used to have to write your signature on a piece of paper, and that was how you authenticated. And signatures are you're so easily able to compromise them, because all you've got to do is either see the back of it or simply just write a little squiggle like the most of us used to actually do. And this is, again, why chip and pin was brought in. But however, with obviously the introduction of 3DS.1 and how we've evolved to 2.2, 2.3, is in version 1, obviously we used to see you had to enter your password. And this was something that was a really clunky, unuser-friendly task for somebody to do, and many people would find that they'd actually locked themselves out of their account, meaning that they couldn't no longer transact. Obviously, this has resulted in high levels of friction, as obviously you then have to actually go ring up your bank and say, look, hi, been locked out of my account. And it was a lengthy, timely process. And that is costly to the consumer for the time, but also actually to the issuers as well, having those extra staff members on call ready to actually be able to unlock these accounts. So yeah, there's been a big change since.
Definitely, yeah, because right now, I think for a second security layer, I get a code, right? In most cases, at least if I look at my issuer, I get a code on my email or on my phone. I type that in and then I'm done.
Yeah. Exactly. Two-factor authentication is so easy now, especially with the technology that we have already to support that, for obviously with the iPhones and bits and pieces like that. It's so easy compared to how it used to be.
Exactly, yeah. No, they definitely optimized the customer experience, a term which we've dropped a few times now. Another term that, Tanya, you just spoke about, RBA, or the risk-based approach. Why is that so important to 3D Secure, Jason?
Take a step back from 3D Secure and actually look at the consumer and what they're actually trying to do. They're at a merchant and they're trying to use their card to send some funds for some goods. Now, if you then look at that from the bank's perspective, there's actually 2 separate steps to complete that payment, because you've now got this authentication layer that happens first, followed by the authorization. Now, with risk-based authentication being brought into perspective, we've now got a position where a bank could potentially and will be scoring the same transaction twice. The initial scoring and kind of the risk-based approach within 3D Secure is done with a better data, as we know that the data captured at the authorization stage is far less rich. So that creates a number of challenges, and those challenges can be impacted in a number of different categories. So the first one, and this is a recurring theme so far, but I'm going to mention it again, is the customer experience. The whole point of risk-based authentication is that it enables you to only authenticate when you need to, and the goal is to deliver the best possible customer journey. It does align it with the chip and pin examples that the other guys have mentioned. So if you're using a card point of sale, I mean, the contactless value has just gone up again to £100 now. I can go and spend without putting my pin in, and I guess risk-based authentication is kind of the enabler for delivering a similar experience when you're shopping online. The next category to consider is costs. From an issuer perspective, you are now risk scoring a transaction twice, but so we've got authentication and we've got authorization, but you're making your final decision with data which isn't as good as the data that you saw when 3DS was happening. So for me, that's another importance, and that's how you utilize that data. One of the things that Featurespace are focusing on are just enabling the end users to do both of them steps in one place. Because of course, if you've got both sets of data in one place, you really can deliver the best possible decisions. We've talked about authentication methods and how they've evolved. So we've gone back. We had a good blast from the past earlier, where you used to be asked for a full password. We then moved to being asked for random characters from that password, and everyone here must have done this, where you say, right, it's asking me the fourth one, and you're reading out your letters to ensure that you're actually inputting the right ones. To one-time passcode via SMS, and now obviously push notifications via app. But again, when you've got two steps in one payment, it's really important to ensure that you're applying them in the right way. And the final one, and this is the one that's going to be kind of a huge focus going forward, is fraud prevention. Because not only do you risk score these transactions twice, you've essentially got two separate systems, and both of their purposes is to reduce fraud, whether that's to detect fraud or prevent fraud. So being able to kind of utilize that rich data to deliver the customer journey that you're looking for, but also pinpoint fraud with accuracy is going to be key going forward. We all know that from an issuer perspective, issuers pick up the liability for 3D Secure, and the proportion of transactions that will now be 3D Secure continues to grow. So there's going to be this big focus going forward, and risk-based authentication is kind of the overall kind of tool that will be used to deliver that.
So there's basically four big considerations you're saying, yeah, when it comes to risk-based approach. So customer experience is one, the cost, authentication methods, and fraud prevention. Tanya, do you agree?
Definitely. Especially, and most important is for me the customer experience, so the consumer one. And when we there, I'm just thinking when we try to thinking of their perspective, both parties, merchant and issuer, are benefiting alike. And when we think of why should I as a consumer authenticate myself when I buy the same when I buy in the same online bookshop the 5th book in a month? Why should I? And also in the other way around, when I'm based in Germany and a transaction is triggered from India, or maybe 5 times, why should that be even asked for to be authenticated and not be marked as the fraudy transactions from the very beginning? So here I can just back up Jason, of course, completely. And then in addition to that, RBA is also a simple requirement to fulfill PSD2 requirements and to apply the exemptions which are needed there. And there are such mandatory use cases, like, for example, the the recurring transactions, where I just ask you to think maybe of your Netflix subscription. The subsequent transactions where you are not even present, you did not trigger the transaction, shall also be sent via 3DS, but you of course only want to apply that exemption with the applicable risk score. So there RBA is becoming mandatory in order to fulfill PSD2 requirements at the same time as supporting the user journeys with it. And next to that, then it's simply also starting to become a scheme mandate. So one of the major schemes worldwide is mandating RBA basically worldwide, and with that forcing all parties to improve the cardholders' experience, which I very much like and support. And Jason also already mentioned it. I can also just underline it again, is the liability shift. So we talked now about cardholders, about the merchant perspective. They don't want to harm the e-commerce conversions, but also issuers are having the liability shift with 3DS. And of course, one reason more for issuers to take proper risk scoring very seriously, I'd say.
Where do we currently stand in regards to PSD2 and risk-based authentication? Sorry, Jason.
So, I mean, firstly, if you look pre-PSD2, basically issuers and regions had full control of how they managed their risk. So basically, if you as a consumer, you would see completely different experiences based on where you are in the world and who you bank with. The good thing about PSD2, as we've mentioned, it does help to align, and this will impact issuers and regions within Europe. And just out of interest, like if I was to, we've got a bit of a spread of people from different regions on the call. If I was to ask Kathy, when was the last time you were asked to authenticate for a 3DS transaction? When would that be?
Just in the morning, so it's almost each and every time I'm doing online shopping. Yeah.
Exactly, and this is a great example, because if Kathy was to ask me that question, I can't even remember the last time my bank asked me to authenticate, because currently in the UK, most banks are authenticating as little transactions as possible because of the focus on the customer experience.
What that's interesting. So maybe talk about those differences in the regions. Katharina, what do those differences look like?
Yeah, the huge buzzword is diversity here, right? So we are coming from complexity to diversity. It's so different from region to region. And as just Jason mentioned, so UK currently is not challenging at all out of the PSD2 mandate still arriving, but coming out of the German-speaking region, we see challenge rates of up above 50%, almost 60%. And maybe taking a look towards the Nordics. Nordics are also very much challenged, but they have a very streamlined, strong customer authentication experience, and that's the EID, so the electronic identity they almost use for each and every use case, if it's doing electricity invoicing or bank onboarding, whatever. So the diversity is huge. And if you remember here, we also had a session once about the European Payment Initiative. And of course, Europe tries to streamline this currently tremendously differentiation of payment authentication experience. But for the time being, there's a lot of stuff which needs to be done to streamline that.
Interesting, and maybe I can just simply add to it that the industry, when we bring it then together in Europe, aims for a frictionless rate above 50%. And as you said, Kati, in the DACH region, we are not there yet, and I can share some numbers from our ACS. We are below the 50% rate, what I see in our transaction base. And when we then only look, and this is quite interesting, at the TRA, so the pure risk exemption, we are at 25%, and when I then bring it in with the protocol versions I had mentioned, we are 7 percentage points worse with the 3DS1 protocol. So here you see more data helps in applying the transaction risk analysis exemption. And when we then look ahead and thinking of the new protocol version 2.3, which was introduced in September, I can already expect that more data which is made available in that protocol version will again help us reaching overall the goal of reaching that 50% frictionless rate European-wide.
It's interesting. So we got UK on the one hand, where there's basically no customer authentication being done, or hardly any. And we got Germany on the other, where it's more than or around 60% at the moment. How is that working out for either? Can we say, okay, the UK is generally doing better than Germany, or the other way around, or is that hard to put a judgment on?
Well, I guess it depends on how you measure what better looks like. Obviously, from a customer experience, I very rarely have to worry about anything other than putting my card details in, unless it is a very high value, high risky transaction. And it's at that point I'm like, okay, I get it, it makes sense. But then like Kathy's experience would be very, very different, because they've got their own way of authenticating, which they're all very familiar and comfortable with. So maybe she doesn't mind. But I guess the definition of better could look different depending on where you are.
Yeah, like PSD2 is obviously came about to create a similar experience for consumers across Europe. If we look ahead then, Tanya, what's next for 3D Secure and Risk?
So for 3D Secure and Risk, all eyes, of course, on the new protocol version MVQ 3DS 2.3, which I just mentioned. And there, for Risk, especially one interesting aspect is in there, which is called device binding, where the consumer can trust the device with he or she initiated the transaction, and that information we can then make available, for example, to Featurespace to then do the risk scoring. And this score we would take back, and it would be, of course, a much lower risk based on this device binding information, and we can apply much more exemptions for the future. There are also other additional data which are made available in the new protocol version, like the CVV, etc. So in general, I expect again that that with the introduction of the new protocol version, we can raise the frictionless rate simply because of the new data by 1.5 percentage points. I do not expect this high deviation like with 3DS1 to MVQ protocol versions, but in general, future is bright.
More protocols by the sounds of it. Nice. Lauren, anything to add there?
Fraudsters are always going to target that new functionality. It's just a natural thing that they do, and it could be classed as a weakness. And for example, the trusted merchant list that came in, I know Jason, if you don't mind me saying, was actually a victim to this. Even though we are fraud experts, we do fall victim to this ourselves.
A little bit embarrassing, but true story. I was testing out some functionality, saved my card to a store that I use regularly. So the fraudster just compromised my sports store account, had a saved card in there, which was also added to a trusted merchant. So they got away with one transaction. But what I will say is the score did go up when they tried a second transaction. That then sent me a notification, which I woke up to the next day, and I was able to contact the bank, and 3DS did its job. So not the worst story, but it is a good example of where fraudsters will take advantage of these additional, I guess, benefits that we're trying to deliver to deliver better customer experience.
At least the system works, right? That's good. And fraud is definitely continuously developing, and so are sort of fraudsters. But it's great, guys, to get some insights into your thoughts and takes on the payment trends, and obviously where kind of risk and fraud prevention, 3D Secure, risk-based authentication comes into play. I think a couple of things that sprung out were the data, which is really important, having the data. Jason, as you mentioned, building machine learning systems around that, such as Featurespace is doing, delivering obviously good authentication, but then there's a fine line of good authentication on the one hand, creating a seamless customer experience, while it's also reducing fraud on the other. Something we've seen is not necessarily super unified across Europe, so it differs per region. It's very interesting. So yeah, great to have you guys, and thanks everyone for listening in. I mean, maybe you're listening on a podcast or for tuning in via YouTube and watching this video. Don't forget to also watch the other 2 shows of this 3-part series. Thanks guests for being here. Yeah, hope to see you next time again.
Thank you very much.
Thank you.
Thank you.
Bye.
Thank you. Bye.